What is going on, investors? Hopefully, you guys had a great week out there, and boy, it's got to be a lot better now that it is Friday, and that means it is time for the Fang Stock Recap Show, where every week we cover the Fang stocks. We'll go over the news, and we'll go over the stock charts of all these companies. Now, it is a modified version of Fang because we talk about Facebook, Apple, Alphabet, Amazon, Netflix, Google, but also Microsoft and Tesla, and maybe in the future, we'll throw a couple more companies in here on the Friday show. Let's kick things off like we always do with Facebook. Started the week at 331, ended the week at 330. I'm recording this 5 minutes before the close. When we get over the stock chart, we'll get the absolute kind of closing values on these ones. Facebook is set to launch their podcast focus features. If you got a podcast, if you're a fan of a podcast, what's interesting is you're going to be able to now tie your podcast to like a Facebook page or something like that. Put your most recent episode up. Facebook is doing this primarily because probably user metrics. Okay. If you listen to a 30-minute to an hour-long podcast, Facebook's going to be able to count you as somebody that is a really active user, somebody that stayed on the site a really long time, even though you possibly just hitting the play button and walking away or listening to it on your headphones. But in general, these podcasts probably going to help Facebook with their metrics, but maybe advertising as well. Maybe they get into the podcasting advertising, which is a really a segmented space. We'll see if they're able to do that. Now, Facebook, speaking of ads, Facebook is testing ads inside its Oculus. So if you got one of those virtual reality headsets that you put on, be honest with you, I've never tried one of these. I've never had a virtual reality headset on. I've talked to some people that have, and they think it's pretty cool. But obviously, Facebook bought this unit many years ago. It's one of the first acquisitions I actually think they did, and they are now bringing ads to it. You had to expect that, and my guess is you're going to have a wide variety of ads in here. Obviously, with games, there's different types of loot boxes and different types of ways to monetize a game. Facebook likely going to be able to do that with Oculus. Now, speaking of VR, Mr. Zuckerberg, the CEO and founder of Facebook, said it will eventually, speaking of VR, will reach the scale of phones and PCs. And he says, quote, it's not like computers are going away or phones are going away, but he thinks it has the potential to be at that scale, just something slightly different, obviously, than your phone or your computer, maybe a combination of both. Now, he gave some examples. He said fitness subscription services could be coming to VR, like boxing and dancing lessons, similar to what Peloton is doing right now with running and cycling and yoga and meditation and those types of things. We'll see if he ends up being correct about that. Moving on to Apple, started the week at 127, showing strength. It's flexing, guys. 127 up to 130. I know that's only a $3 move. When we get over to the stock chart, we'll see if this one is on its way to breaking out. We'll see about Apple when we get to the stock chart. House antitrust bill would prevent Apple from pre-installing apps. It also applies to Amazon. Thought this was interesting. It might apply to Microsoft, but it might not. The Justice Department and FTC has discretion. But this is from a Democratic representative. So I don't know the odds of this getting through, but I'm pretty sure the House of Representatives is, if a Democrat brings something to the floor and they have support of his party, his or her party, it will get passed through. Whether or not this is something that can get past the Senate, not exactly sure. So we'll see what happens. The one thing I just think is just a tad bit ironic is that Apple and most of these companies donate heavily to the Democratic Party. And what do? They introduce bills that make it harder for them to make money. So we'll see what happens there. Moving on to Amazon, talking about strength. This is a double flex here. Start of the week at 3,357, showed strength pretty much all week long, ended very close to $3,500 level. If you've been following the show, you know that's a critical level. When we get over the stock chart, we'll talk about that. Now, Amazon is pursuing Peyton Manning as its NFL analyst. They've got this Thursday night exclusive. I think in the past, you could watch that game maybe sometimes on NFL Network, sometimes maybe on CBS, sometimes it was simulcast. Now you have to have Amazon Prime to get this game, and they want to have Peyton Manning and potentially Al Michaels as its analyst team. Now, they're offering Manning potentially, quote, Tony Romo money, which is a $180 million 10-year contract that Romo signed with CBS. So that's $18 to $20 million per year. Tell you what, I'd probably call a few football games if you offered me a tenth of that or a hundredth of that. I would gladly do that. So Amazon App Store offers small app developers a 90% revenue cut. So it starts at 80%. So a small developer for Amazon is any developer under $1 million in revenue. So if you're an app developer, less than $1 million in revenue, you will get charged 80%. But it looks like if you use AWS for some promotional credits for hosting whatever platform or app that you're using, you get another 10% off. So then you get equivalent of a 90% cut in terms of for every dollar you keep 90 cents of that. Now Apple obviously tied up in this Fortnite battle with Epic Games. They have a 30% app tax. So we'll see what the judge decides in this case, and there'll be appeals and all this other stuff, and we'll see what happens. But it could be that the old free market decides this, okay? If Google and Amazon and maybe even Microsoft and some others out there cut this and the developers start focusing on these other platforms, Apple may be forced to cut this 30% tax. Or we'll just see Apple's dominance, that they can charge this 30% because they have such a gigantic user base that developers don't really care. They'll pay the 30% because 30% at Apple is greater than the 90% that you would get to keep at Amazon. We'll see what happens there. Super interesting here. Amazon continues to carry cargo for the United States Postal Service as its fleets grow. So I like this. Okay, this is an example of like public and private, government and private, or in this case, kind of public companies working together. Amazon has invested a ton of money into their air fleet, obviously to deliver packages, move product and inventory among fulfillment centers, and they have excess space there. So what are they doing? They're carrying some packages and some letters and stuff like that from the United States Postal Service, okay? This helps the government. It helps the environment to a certain degree because these planes, the more fully loaded they are, the more efficient you are at moving this space. So I like this. Broadly, not necessarily Amazon is going to take over the USPS or that it's going to put it out of business or whatever. But there is just so much space in here. So you've got FedEx and UPS, obviously the major players in package, and then you obviously got the government controlled entity of the United States Postal Service. Amazon is going to carve out a tremendous amount of space in here because when you look at FedEx and UPS, both of those companies have to put surcharges on e-commerce sellers and anybody moving packages in the fourth quarter. Why do they put surcharges? It's not that they don't want the business. It's because they can't handle it. They only have a certain amount of drivers. They only have a certain amount of trucks. They only have a certain amount of airplanes. So in order to maximize that, they actually have to raise prices to kind of throttle down demand a little bit. That is because there is more demand out there to ship than there is capacity to ship things. So Amazon has plenty of room to come in here and not necessarily take market share from FedEx or UPS, but actually just gobble up market share that's already there that these companies can't handle. So I'm very excited about that business. If you're an Amazon shareholder, that business should continue to grow, and they'll expand it out at some point. You're going to be able to ship a package through your Amazon guy is going to drop off a package, and then you're going to be able to give them a package to send to your aunt or your uncle or your friend or whatever. That is coming at some point. I'm almost certain of that. Amazon's cashless technology is coming to a full-size grocery store. So I have not had them. Leave me a comment down below if you've actually been in one of these Amazon Go stores. So the Amazon Go cashierless technology originally is these small kind of, think 7-Eleven type convenience stores where you walk in, you grab some stuff, grab a soda, some chips, a sandwich, a banana, whatever, walk out. So you check in with an app and you just walk out, and you are charged on maybe your Amazon account or your Amazon credit card or whatever it is. Now they're bringing this to a 25,000 square foot Amazon Fresh store loaded in Bellevue, Washington, which is close to the headquarters of Amazon. So we'll see what happens, see if they're able to roll roll this out, and then eventually, like we talked about with this, how Amazon built this fleet out, and they're basically kind of leasing space to the government. Eventually, they'll allow you to buy packages and send packages on here, not necessarily related to an Amazon purchase. Amazon's going to do the same thing with this cashierless technology. Okay, they're going to develop it and build it out for their own stores, and then what are they going to do? They're going to go to a Kroger. They're going to go to Lucky's or Rayleigh's or any of these big, grocery store chains. They're going to lease it out to them, just like they did with AWS, just like they've done with the third-party sellers on their platform, et cetera, et cetera. They're going to eventually get to that point. Now, moving on to Netflix, start of the week at $4.91. Ticked up a little bit. We're in a tight range with Netflix. When we go over the stock chart, we'll talk about that. Roku's content ramp up looking more like its parent Netflix. I actually didn't know this, but Roku actually was a part of Netflix. So Reed Hastings started basically Roku, but then kind of spun it out and sold it because he wanted to get Netflix on the PlayStation and the Xbox and the Apple TV. And he thought that if he had this Roku device, that these other hardware providers would think that he's in competition with them. And so he basically spun out Roku, and they made $1.7 million on a $6 million investment. You think that's probably good, but unfortunately he sold it in 2009. Now Roku is worth $45 billion. And Netflix would have owned about 15% of that if they still owned it, although never know where Roku would be if Netflix never divested. But look, Roku is spending about $1 billion on original content. Netflix is spending about $17 billion. So there's a lot more room to grow there for Roku. And I tell you what, if you're a content creator or somebody that can get content on these platforms, you're probably excited about all the spending going on. Now, moving on to Google, start of the week at 2,428, slid sideways to 2,400. We'll talk about when we get over to the stock chart on Google have we broken trend on this one? Is this one trending back down? We'll talk about that here in a second. EU is prepping to launch a formal probe into Google's ad practices. So it's like where's the broken record around here? There's got to be a broken record because it seems like every week we talk about the EU or the United States government or some government out there is launching a probe into Google or Facebook. It tends to be Google or Facebook. Amazon and Apple probably play second, third place. And then Microsoft to a certain degree, and Tesla and all that, and Netflix kind of avoid all this, at least to the current time. But Google's no stranger to this. They have a team of lawyers. They'll end up probably quote unquote, losing this fight by paying up some money. That's ultimately what this comes down to. These government officials, they don't really care. They just want money. That's all they want. AMD rises. So AMD is a stock that I've recommended several times here on the show, including maybe just a couple months ago. I bought it in that low 70s. It ticked up nicely this week. In fact, up 4% after Google put its EPYC chips into its new Tau VMs. So basically, though, AMD is powering a lot of these kind of cloud computers, AI type stuff, and it's just a trend that's likely to continue. So I like Google as a stock, but as a side note, obviously AMD, Nvidia, those types of stocks as well. Google's Waymo self-driving car unit raised $2.5 billion amid reports of a eventual IPO. So this will be interesting. If you own Google shares, maybe you get a special dividend. Maybe you get some of the shares that the spin out. Maybe it's just recognized on the balance sheet as just, here's a gain that we had. We'll see what happens. We'll see what Google decides to do at that time for the shareholders out there. But what I thought was interesting is they raised $2.5 billion, but they wanted to raise about $4 billion. So we'll see what happens there. And this was from an outside group. Anderson, Horowitz, Fidelity, and some other A-list investors put up the $2.5 billion. Now, Alphabet bought Waymo originally, I think, for about $2 billion. But so we'll see what happens to this unit going forward. Google obviously owns a percentage of it. And like I said, if and when it goes public, there's a couple options. Either they just recognize the sale on their balance sheet and recognize it that way. They can give you, the shareholder of Google, some shares in this company or maybe a special dividend or something like that. We'll see what they decide to do there. Now, Roku slipped. Speaking of Roku, Netflix, we're kind of tying in some other stocks here. It slipped 6%. as YouTube TV hands out alternative streaming devices in a promotions. So Google has this YouTube TV. It got kicked off Roku. We talked about this a couple weeks ago. YouTube's like wants Google/YouTube wants certain search results, those types of things. And Roku's kind of balking at that, and they're still kind of fighting over this. And Google said, hey, you can get a free TiVo Stream 4K device basically for free. And so we'll see how if this heats up anything in the future. Now, moving on to Microsoft. Start of the week at 257, end of the week at 259. Very important trend line as well on Microsoft. We can get over the chart. Not much in the way of news coming out of Microsoft this week. Tesla, start of the week at 623, end of the week 623. And you might be wondering, well, it's just a flat week, no big deal. When we get over the stock chart, actually some interesting stuff. We talked about how Tesla was kind of coming into like the bottoming of a wedge formation. And so when you go flat in a wedge, you're actually starting to peak up above it. We'll see that when we get over to the stock chart. Now, Tesla tipped by Mizuho to see 10% global market share in a bull case. So right now, Tesla, it appears, has about 24% of the kind of electric vehicle market out there. But obviously, as the electric vehicle market grows and you get GM and NIO and Li Auto and all these other car makers, Audi, Mercedes eventually as well. Well, the market grows, and so naturally Tesla's market share of that starts to shrink a little bit, but even as EVs grow, a smaller percentage of that is still a big piece of the pie. And this analyst firm sees that Tesla could still get a 10% global market share of that, which would be enormous. I mean, we're talking about billions and hundreds of billions of dollars. Tesla's price target was cut, though, at Canaccord, with new battery cell breakthrough still a wild card. So they cut the price target from $974 to $812, sitting at $623. So either of those price targets look fine to me. We talked about last week how this Model S Plaid Plus was canceled, but Elon kind of spun it that, hey, the regular Plaid was so good that we didn't need like a plus model. And it was really because you had this new cell design that just really wasn't ready, that they just couldn't roll out in time for this new plus car. Look, the Model S Plaid is incredible. Okay. I mean, it's just a fantastic looking car. And believe me, if I wanted one or could use a car like that, I'd love to buy one of those cars. And so I don't necessarily see this cancellation of this car a big deal. Tesla will probably get there. Okay. Tesla's one of those companies, and this is why investors love them so much. They kind of overpromise. Okay. And there's a fine line there with stocks out there. Sometimes stocks overpromise, underdeliver, and they get hammered. Whereas Tesla kind of overpromises and underdelivers. But because the way they overpromise, also the industry that they're in is still kind of virgin snow to a certain degree. Look, people are willing to give them the benefit of the doubt, and it works for Tesla, and it works for a couple other companies out there. Now, moving on to the stock charts, let's take a look at Facebook. This one we've talked about. On a rocket ship up, we've stalled out here at 330, 329. We'll just make a round number, $330. We have been in at 330 all month. Okay, this stock has just hit its head on 330 for basically a month now. And so what's going to happen? It still hasn't broken trend, okay? This thing is still in an uptrend. We've just kind of sideways consolidated. I know, again, look for the broken record in the room. I'm waiting for this to go one way or another, okay? We're at a fairly critical, and this is why it's probably sideways consolidating, okay? Everybody's looking at the same chart, the same price action, and the same technical levels and kind of analyzing this the same way. Everybody's saying, well, I don't know which way this is going. And so you have kind of an equilibrium then at that point of buyers and sellers. Buyers don't really want to step in, but sellers don't necessarily want to step in at this level either. And so you kind of have this indecision point, and one way or another, sometime in the next, I don't know, I would guess week or two, Facebook's going to go one way or another. We're going to either continue this trend line up. We're looking for a push above probably closer to 340 on this one. You start marching your way up to 340. I tell you what, that wouldn't necessarily be confirmation, but that would be a very, very strong sign that we are just going to continue up this trend, a la a chart of Google, which we'll look at here in a minute. Now, if we break down here, we're looking for right where we're at, okay? We're looking for a sharp break below 330. You break below 330, then all of a sudden 320, 315 is in play. All the way back here, back down to 300 would, in my opinion, trigger a buying opportunity down there. Moving on to Apple. Oh my goodness. We've been on our sideways consolidation for Apple for a very long time now, since August of last year. Can we finally get above this 135 level, and not just get above it? Okay, we've been above 135 and we kind of hung out there for a little bit. This was back in February, but we broke all the way back down here to 120, and then we kind of bounced around, and now we're walking our way back up. We're looking for this thing to break above 135. All these companies report earnings next month, or probably a little more than 30 days earnings on most of these companies. I think Netflix is the first to report. Apple, Amazon, all those other companies follow later in the week. And so we'll see if that's enough to push this forward. Okay, I wouldn't necessarily I think this thing is going to either run before earnings. I don't think it's going to wait until earnings. Okay, people are either going to anticipate really strong earnings and a pop for that, and they're just going to bid this up into earnings, okay? And then maybe earnings gets announced, and it either confirms what everybody bought and we shoot higher, or it's a kind of a disappointment, or it's kind of, business as usual, and we come back down with Apple. So we'll see what happens there, but we're looking for a break above 135 on this one, and it could happen. I wouldn't necessarily expect it to happen next week, but we're probably looking over the next 2 to 3 weeks going into earnings. Can we break up above that? We'll see what happens there. Now, where is Apple? We just talked about it. Amazon is basically in the exact same spot. We've been sideways consolidating for basically a year now, like literally almost a year on the day. Right where I have my cursor, this is July 6th of last year. Here we are today, June 18th. So not quite a year, but we're getting close there. Okay, we're about 11 months. We've hit our head twice on 35.50. Give or take a couple bucks, but 35.50 on Amazon's a critical level, and we could get there as soon as next week. Okay, so you break above 35.50 on Amazon. That's a very bullish sign. I would also expect it to be a very bullish sign for their earnings. Not that you have insider trading, but I would guess a lot of that, if you start breaking up above here, that means people with significant amount of knowledge, or at least belief in Amazon, believe that their earnings, which again are about 30 or 40 days away, are going to be absolutely spectacular. And I would probably agree with that. And so can we break above 35.50? And if we do, sky's the limit with Amazon. We could test all the way up to 4,000 or higher on this one. We get rejected here at 35.50. We could come all the way down. It depends on how hard and why it gets rejected. But buying opportunities are down here, 2,900, 3,000, 3,100 as usual with Amazon. Netflix just chilling, just sideways consolidating. If you like Netflix, you're bullish this stock, you want to accumulate it, here's your chance. Right here, okay? Because look, yes, you could wait down here at 467, 470 is a better spot. So I wouldn't necessarily put all my chips into the table here with Netflix, because if you get a little bit of a pullback, you're shaving off $30 off the share price. That's not, it's like 4 or 5% where the stock is right now. So you could get a lower price, but right here, you're sideways consolidating. Look, we have a low here, a higher low. You come out next week, you're looking for a break above, call it the 510 level. That's another higher high, basically. And you can come all the way, walk it back all the way up here to 550, 560 up in this one, and we'll see what happens with Netflix. Moving on to Google. This is the most sophisticated technical analysis you will see all day. Guys, we are on an absolute uptrend elevator shaft with Google, and look, you can adjust this line, okay? I just kind of throw these in here. You could pull this down, you could push it up. I don't care what you do. It doesn't matter where you put this line. The bottom line is this trend is intact, and it is intact until it's not. You're looking for really, I think, a break below, for the trend not to be intact. get below 2,300, okay? And, you want to get down there, pretty significantly on some pretty solid candles, maybe even some solid volume. That would show me the trend has broken. Then you start picking by the dip levels, okay? But other than that, you just ride this train all the way up and just let it go, okay? There's no stopping Google at the current time. I would not assume that trend is going to break down anytime soon. Now, moving on to Microsoft. Not a lot of news out of Microsoft this week. Interesting level where we're at with Microsoft is we created a top here with Microsoft. So we've created a top, sold off, topped out at 262, bottomed out at 240, came all the way back up here to about 260, 262. What will happen here? Okay, now I tell you what, you get rejected here at 260 next week or the following week with Microsoft, wouldn't really trip, okay, because we're still, this is just like Google, we're in this uptrend. If we come back and test this trend line at 250, 255, wherever it is, I wouldn't be worried, okay? Because we just kind of came down here, test the lower end of our trend line. And again, you can draw these trend lines. I just kind of throw these out here. You could drop this one down. You could bring it up. I don't really care. But if you come down here and touch a legitimate trend line, this chart doesn't want to stop moving. If you come down here and touch this, wouldn't worry at all, okay? We're still in an uptrend. We're still creating higher lows, okay? And we could bounce, but we're looking for a break above 262 on this one and probably a pretty solid green candle, not kind of just wicking through it, or one candle, looking for two solid candles above that. And then it's like Google, okay? We just looked at the Google chart. This thing could just continue on up and up and up. You can play that momentum if you want to. Now, moving on to our last chart of the day, Tesla. And we talked about how it basically went sideways this week in terms of price action. Okay. But look at this. So we've got this trend line in here. This is like a downward trend line. And it doesn't, you can draw this in a number of different ways. I like it to touch kind of the tops and just kind of, have it touch as many candles on the way through. Look, from where it's drawn now, we actually broke above this. Okay. So we'll see with Tesla. And again, we created a low. Let's zoom in here. Watch, I'll show you. So we created a low here with Tesla, higher low, okay? You confirm this next week. Tell you what, you've got 700 in play, 750 in play, 800, all-time highs, $900 back in play with Tesla. We'll see what happens though, okay? We get rejected here. This is just a fake out. I would still have my money ready because you could create buying opportunities down here at 400 to 500. Fantastic buying opportunity, in my opinion, with Tesla, especially if you're the long-term type of buyer. So we'll see what happens with Tesla. Critical levels coming up with them. We've got earnings. We're not rolling into earnings, but you should be thinking about that with all these stocks, is that we're about 40-ish days away on earnings on these ones. And so let's see, Tesla is actually 33 days away. An app or Facebook is 41 days away. Google is 41 days away. And so we're kind of rolling up on this. Microsoft is 33 days away. We're coming up on this, okay? Netflix is 32 days. So we're rolling into earnings season. And so what I typically see with these stocks is sometimes you just run up into earnings, okay? People anticipate this. Remember, the stock market is forward looking, okay? So people are already anticipating earnings, what they're going to be, what the reaction is going to be. And so people are already placing their bets, so to speak, on what they think is going to happen. Okay, and so you could see a run up. Also, you could see a dry up of either buyers or in some cases sellers heading into earnings season, and that also causes the price to rise because sellers are like, ooh, earnings are coming up. I'm going to wait to see what happens. I want to be hands off for the next 10 days on a stock or 15 days or whatever it is. So we'll see what happens with the momentum of these stocks. Hopefully you guys have a great weekend. Happy Father's Day to all the fathers out there. We'll be back again next week with more videos. Good luck with your investments.